Hi everybody and welcome to the channel. I have a slab of grass-fed, grass-finished crypto news for you. Hasn't been cooked, really hasn't been prepared at all, just washed it. And so I invite you to cleanse your palate and receive the nourishment of today's news. China is cracking down on Bitcoin. Even more now, it's getting worse. But is it getting better? So mining Bitcoin could get easier after China's crypto crackdown. The Chinese Bitcoin crackdown has intensified over the weekend, with authorities in the hydropower-rich Sichuan province ordering crypto miners to shut down operations. According to the reports, more than 90% of China's Bitcoin mining capacity is estimated to be shut down. This is big news because it is thought that between 65 to 75% of all global Bitcoin mining operations take place in China. So why is China cracking down on Bitcoin? Well, they're citing environmental concerns because Bitcoin is bad for the environment. And China is taking a very powerful step towards environmental health. And this is a really beautiful move by China, who is literally the embodiment of environmental degradation. So I don't think this is about the environment, folks. Maybe it's because they're trying to release their own digital currency. You ever thought about that, huh? You ever heard of the digital Yuan? Or the Yuan? Or the Yuan? You ever heard of it? How do I pronounce Yuan? Yuan. Come on, YouTube. Help me. Okay, how do I say this thing?
So let's have a look into this. For Chinese word, it's not actually very hard to get it right. So you might as well. You, it's not correct in Chinese, but rather the sound is more like U, like the German U. U. And like the French as well, if you know your French. Rather than you, okay? Pretty straightforward. Secondly, it's not the sound an, as in an, or as in an ant, but rather
the
an,
digital
as in en, like in the word.
The digital
and. Do you get it?
An.
An.
The digital
not you. Yuan. Pretty straightforward, right?
No, it is not straightforward. Yuan? I thought it was Yuan. That's straightforward. Yuan is straightforward. Yuan is not straightforward. Well, whatever the heck it's called, China is creating its digital Yuan. Yuan. Okay? That's what's going on here, in my very, very humble opinion. China has created its own digital currency. This was in April. The cyber yuan stands to give Beijing power to track spending in real time, plus money that isn't linked to the dollar-denominated global financial system. Whether it is their environmental concern or whether they're trying to clear out all competition for their emerging digital currency, China is going for the jugular on Bitcoin mining. And although this might not be good news for miners in China, this could definitely be beneficial for the larger Bitcoin mining community. The more and more miners that pull out of China and the more mining operations that are shut down in China, the more and more easy it is to mine Bitcoin. So Bitcoin's hash rate has gone down from a record 180.7 million terahashes per second in mid-May to around 116.2 million as of Wednesday. And so crypto experts are saying that with more Bitcoin miners going offline due to China's restrictions, other miners' share of the network will increase, potentially making mining more lucrative. Essentially, network difficulty goes down the less mining equipment is online. So there is an opportunity here. Now, yes, Bitcoin has dropped in half since April. It was below $30,000 earlier this week. But for me, this news story is communicating something much bigger. If Bitcoin bounces back, if this attack from China results in Bitcoin's growth in the short term and in the long term, if this situation ends up being a good thing for Bitcoin, think about the implications of that. That means that when a mega superpower like China decides to eliminate Bitcoin from its country, Bitcoin gets stronger. Out of all the countries that would be able to affect Bitcoin, I would say China is one of them. And it's so ironic because as the crackdown intensifies, we've seen that this is incentivizing people to invest their mining operations elsewhere and thus more money and resources are going to enter this market. That is speaking to the anti-fragility of a network like Bitcoin. So what is anti-fragility? So this is a really important word that communicates what some people see as the biggest value in a network like Bitcoin. And this term has been made popular by author Nassim Taleb, and he defines anti-fragility in an interesting way. And anti-fragility to me is when systems, companies, or individuals are essentially getting stronger as they face chaos, as they are attacked, as they face stress and disorder. As Taleb puts anti-fragility, some things benefit from shocks. They thrive and they grow when exposed to volatility, randomness, disorder, and stressors, and love, adventure, risk, and integrity. So an anti-fragile system gobbles up an attack. It loves when there's chaos. It loves when its rug is pulled out from under it. It gets stronger because of these events. So if the cryptocurrency marketplace starts to see Bitcoin more and more as anti-fragile, when it's actually happening in real time and not just a theory from an author, and when this anti-fragility starts to be recognized in other systems and other networks like Ethereum, we would probably see more and more confidence in the market, and we would probably see more interest and investment. And so as people become more and more aware of the potential anti-fragile nature of the cryptocurrency marketplace, they're going to be more confident and comfortable investing. And so for me, although China is attacking Bitcoin, it makes me feel optimistic in what we're learning about the cryptocurrency marketplace from this attack, if of course Bitcoin is able to bounce back and show its anti-fragile nature. But with all this being said, we've still experienced a huge crash in cryptocurrency and a huge crash in Bitcoin recently, and people are scarred from that, I'm sure. And investors are feeling hesitant to jump back in, especially when something like Bitcoin has dropped 50% with such a huge market cap. I mean, that's a lot of money that was lost from that market. So let's say that you want to jump back in, that you're realizing the anti-fragile nature of this marketplace. You're wanting to invest back in cryptocurrency, but you don't want to play this game of hoping that a coin or a project doesn't collapse by 50% in one day. This is the perennial problem of investing in stocks. This is the challenge of volatile assets. This is the risk of cryptocurrency, but these risks can be mitigated. And I was exposed to a project that's called YDragon. And what they've done is they've put together an index fund for cryptocurrencies. Now, this has been done before, not only in the cryptocurrency universe with Crypto 20, which has created a cryptocurrency index fund that is tokenized, but also Bloomberg created the Galaxy Crypto Index, which is traded on the stock market. But YDragon is a little bit different, and it offers a unique value point that I think should be talked about. So what is an index? Just for clarification, an index is a collection of high-performing assets. The S&P 500 is one example, and that is 500 of the largest companies on the stock market. So a cryptocurrency index, in theory, would be a basket of some of the best-performing cryptocurrencies. YDragon's token system, though, is unique in that the holders of the YDragon index, which is the collection of top-performing cryptocurrencies, can also generate high yields, passive income on collateralized assets through their staking platform. So not only are you able to invest in this index, which YDragon has compiled, but you're also able to stake the YDragon token and gain passive income on their platform, which is an awesome feature. They are cross-chain, which allows you to invest in indexes from various blockchains. Like I said, they have yield generation built in. There's a risk diversification that is inherent to investing in an index, because when one coin collapses, there are other coins in your index that are holding up the value of your index, of your coin, and protecting you from that volatility. And then their token also operates as a governance utility. So leading up to their launch, they'll be launching on the Binance Smart Chain with the B5 index, which I'm assuming is the top 5 performing tokens in the Binance Smart Chain ecosystem. But their technology will allow them in the future to expand that ecosystem to other blockchains. So really fascinating project. You can check them out on YDragon.io to learn more about their platform. Friends, family, fellow environmental activists with completely selfless motives, thank you so much for joining me in my channel. I wish you best of luck and a lot of fun on your adventures, and I'll be seeing you soon. Until then, goodbye for now.